Okay, we got a great panel for you, and we're going to wrap it up in great style here. As you heard, I'm Alan Winshaw. I've been in the blockchain community for a while, so we're all seeing these initial coin offerings kind of take off across the world. I do have a token offering in the market today, and I know that a number of other folks do as well. So why don't I just start here, and Toad, you want to talk, you want to just tell us, for being closest to me right now, tell us what the advantages are of initial coin offerings. So we're going to start there, and you'll get to, we're going to go with every one of us, and Ollie can go last.
Let me go last on that one.
You want to go last on that one? Because you want to take the other side of this. Okay.
I need to think about the advantages first.
Okay, so Seraphin, go for it. We're doing advantages and disadvantages. So you want to pass?
I can talk about disadvantages all day. Honestly, I mean, the only advantage to doing an ICO basically is to get a bunch of money early and not having to have anyone looking over your shoulder to actually release a product.
Okay, that's good.
There you go.
That's it. Go for it, sir. Pardon me?
You only stick to one?
You're going for, yeah, so let's start off with the advantages. So tell us who you are, what you do quickly, and the advantages.
Tell you who I am.
Please do.
Okay, so my name is Seraphin Leinengel. I'm the CEO of Data Wallet, and we're a decentralized data exchange. And so one of the main advantages of ICOs, for me personally, and having built this company in Silicon Valley, is that you don't need to be a member of the Silicon Valley Boys Club. It's a huge issue for anybody who's trying to raise money, who tried to raise money like 3-4 years ago. You really need to find your way into the ecosystem. You need to make the right friends. There's this hierarchy of like intros. You need to basically get an intro from somebody who made the VC money, and only at that point in time, it's actually a high fidelity intro, and it takes so much time. The transaction costs are enormous, and it's just a huge, barrier to entry.
Okay, thank you. That's a great start.
My name's Daniel. I'm a founder of Plugged. We're an app that launched a few weeks ago, and we've tokenized the reward platform. We're still about to make it. We haven't made a decision yet on whether we will an ICO or not. I think the biggest advantage is being able to raise money without some of the overbearing term sheets from venture capitalists. That obviously, and I'm sure you'll bring this up later, but that obviously also brings a lot of responsibility. But that for me is the biggest advantage.
My name is Matthew Spoke. I'm the founder and CEO of a company here in Toronto called Nuco, venture-backed company, so we've gone through kind of the traditional financing process. Also the founder of our newest project that we just recently launched an ICO for called Aeon. I'd say in that context, the biggest advantage of doing a token sale is essentially this idea that you can, what used to be two different groups of stakeholders in traditional businesses, your investors and your customers, you can essentially unite into a single group of stakeholders, your token holders, who become the people who support your project and the eventual users of your technology.
My name is Sean Blundell. I'm a securities lawyer at Gowling WLG. I'd have to say the biggest advantage I see to an ICO is the speed at which you can raise money. It's one of the fastest moving ways of raising capital that I'm sure anybody in the capital markets has ever seen. There's lots of people who are doing it quick. I think that's one of the biggest disadvantages, is that you can get to market so fast, and we can talk about that more later. But if you want to raise money fast right now, I think the ICOs are the way to do it.
This is Trevor Kaverko from Polymath. We're in the middle of our ICO, actually. And I think tokens are superior than equity funding from both an investor and a founder standpoint. As an investor, you get non-dilutive tokens that you can't just issue new tokens and get diluted. And you also get liquidity. If you invest in a startup, it could take a decade before you get to cash out. In tokens, you can do it on day one. And as a founder, I'd say the number one benefit is if you do a certain type of token offering, you can raise non-dilutive capital. So you can actually raise money without giving up ownership in your company.
So we've touched on a number of really good initiatives and advantages, and you guys have all taken the initiative to kind of be leaders in this space. So I would just echo the fact that we've got a global capital market now because of this ICO phenomenon, and we can move every one of you today. And a quick show of hands for us to know who has actually participated in an ICO so far. Amazing. So you've taken
I
your
think there's somebody from the OSC here
yeah,
today.
exactly. Well, you know, there you go, right? Canadian citizens, and this in this capital is moving. It's moving across borders, and you know, could have ended up in Switzerland, but it could have ended up anywhere really, because you're sending it to the blockchain anywhere and everywhere at the same time, right, guys? So instead of going hat in hand to Silicon Valley, what we're doing is we're taking our messages to the public. We're taking our messages to both. Well, in some cases we're limited to accredited investors. In some cases we've got the ability to do retail. So there's kind of both kind of responsibilities here. But what you've heard is non-dilutive. You've heard quick money. Let's talk about the other side for a minute now. Tone, you want to get into maybe the disadvantages of ICOs?
Well, I don't even know where to start. It doesn't, well, you can always print more tokens, right? So I don't understand how the non-dilution works, right? You're not giving up equity, but you can print infinite amount of tokens. There's nobody stopping you, right? And if you didn't print enough tokens on one platform like Ethereum, you can now print more tokens on Waves and then Tezos. No, wait, you can't. That one just scams people. You were supposed to just be able to print more tokens on Tezos. I see other problems with it. To me, I don't understand how they're not securities. I never participated in the Ethereum pre-sale because to me, they just created a security out of thin air. Now they're saying it's not a security, but the DAO said they weren't a VC fund after it got hacked. The SEC disagreed with them, but it didn't really matter. And when it comes to using your ICO as a token on your platform, again, I don't see how that makes sense. I don't recall Amazon having this idea of charging people in Amazon stock for their products, turning every one of their users into a speculator. But that seems to be a good idea in this space.
No, but I think, you know, you mentioned that earlier, and I think just to contest that, one of the reasons this industry is getting so much attention is because we're creating liquidity in assets. The reason you don't get Amazon asking people to spend their stock as product cost is because there's no liquidity in the Amazon stock. Meaning you couldn't transact in it as efficiently as you could with the token. There's no difference if you own a, you know, token X or token Y, the ability to trade between them, transact in one, transact in the other, and go back and forth almost instantaneously. That doesn't exist in the capital markets today, which is why you couldn't do that. But I think to the extent you could incentivize your investors to become your customers and your customers to become your investors, if it was efficient, any company would do that.
I would also say on the dilution standpoint, you know, I've invested in the equity of a token project and the token of a token project. And the equity, it gets diluted, you get new shares issued all the time, you have to pro rata to keep the ownership stake. But I know, based on the smart contract that the token lives on, that there's a limited supply. And if it is growing, it's linear and predictable. And to me, that's one of the reasons all the price action is upwards, is because demand is increasing and supply is staying relatively flat.
Can I just want to add to what Matt said? So, Tony, you mentioned Amazon. If I was to go to a developer and buy a pre-built condo, I put down a deposit of 20% on, say, a $500,000 condo. It's $100,000, only $20,000 of that is insured. If that project never gets completed, I've lost my deposit. Now, you may argue that people are buying that condo to go and live in, but I would argue that many people that invest in pre-built condos are buying that as an investment with, you know, with future profits in mind at the efforts of others who are building that condo. So I don't see a huge difference between pre-built condos and ICOs. The only thing touching on your point of having dilution is, you know, ICOs with no caps. They cause that problem. You know, if I go and invest in a condo building and there's 100 condos, I know I get one of those condos. They can't go and take 700 deposits for 100 condos. So I think that, you know, ICOs do need to have caps so people know what they're investing in and how much they're getting out of it.
just to add to that, I also think it's important not to look at it as a one-shot game, right? So I mean, if you issue more token on different platforms, you're screwing yourself over because the value of the token, which is largely dependent on a discounted expected utility value, goes down dramatically. Nobody trusts your institution anymore, right? And the other thing that I want to highlight is incentives, right? So token holder have incentives to make a marketplace work. That is especially so if you are reliant on network effects, right? Now that may be interesting in the case of Amazon, granted, but a lot of the two-sided marketplaces need to have some sort of incentive structure in the early stages. And what did you get for being an early member of Twitter? You get a cool username, but that doesn't buy you, okay, maybe you can sell this somehow in some illegal way. But incentives, especially network-driven applications, is so important. And I think that is something that tokens are really the first medium to address that particular issue.
Sean, did you want to jump
I
in
was
and
just
talk
gonna
about
say,
disadvantages now, or you want to pick
Well, I can talk
up on that?
disadvantages. I think one of the biggest disadvantages is lack of disclosure.
Is what?
Lack of disclosure.
Okay.
Lack of oversight. We talked a lot about a bit about what's the security, and
So you've got white papers.
I've seen white papers. They don't necessarily address a lot of the risk factors that are involved. I think there is a lot of risk involved in ICOs. There's a lot of good projects out there. I think that it's an excellent way of raising capital in the future. But unfortunately, I think 90% of the ICOs, 95% of the ICOs won't be around in a year, and a lot of people are going to lose a lot of money.
Yeah.
And I think that the liquidity factor that people are discussing about it as an advantage, that's basically why people are getting into ICOs, is because it's a good way to make a quick buck. So I don't want to say that it's a terrible way of raising money, or that it's a bad invention. I think it's a great invention. I just think that we need to have more oversight, and the securities commissions are
So the buyers are
starting to
getting,
exercise some of that oversight, which
Yeah.
is a positive, I think, because it is a legitimate way of raising capital, and the more we can go towards a regulated way of conducting ICOs, I think that's a benefit for society.
right? So you say you're commenting on the lack of oversight, but you're also commenting on those that are getting in and looking to make a quick buck, as you said. So is that an issue these days?
Flexcoin.
I think
Flexcoin? Sure.
I
Okay.
said that
The SEC would reach
Yeah, and as they should.
into Canada for
I
that.
think where the regulators should be focusing is on criminal behavior. And
Right.
what's crazy to me is that we're talking about investor rules that were defined like decades ago, if not a century ago, that we define investors in the context of capital markets. We have this threshold created around what we call accredited investors because they are so-called sophisticated financial investors. I bet you the average accredited investor by Canadian rules, by US rules, is completely unsophisticated in this topic. So what makes them better positioned to make a decision on what cryptocurrency project to invest in when probably the average 16-year-old who's taken like a programming course is more sophisticated than a 70-year-old who happens to have $10 million? And
They have the money to lose. And that's important. I can show you some of my emails, actually. I have like 15-year-olds asking me for trading advice. Somebody just emailed me because I talk about the price of Bitcoin on my blog, and people are telling me they're trading and they've lost so much money trading because there's no barrier to entry. But on the other point, somebody just said 95% of these are not going to be with us anymore. I think that number is a little low, but let's assume it's only 95%. Why do you guys think if 95% of ICOs will all crash like in a dot-com bubble, why is it a good idea for not very rich people to invest in these things if there's a 95% chance they're going to lose the money?
Okay, so let's put that on the table, because I think I've gone through a year of regulatory machinations, and I've got a regulated security out there in the marketplace today with Token Funder, and we agreed that we were going to look after the investor protection side of this. So I guess the question then comes around to how can we get the access to liquidity, access to the capital, and at the same time, essentially make sure that everyone that's investing here is doing it in a safe way, or at least in a suitable way, because that's where our regulators are coming from today. Is it a suitable investment for you So you're not spending your entire mortgage, money on an ICO that you really believe in. So who wants to tackle that one? Like, how do we keep our investors safe and still get access to this? Because, doing it in Canada, we require KYC. But other countries outside don't require that KYC, right?
I've been, and Alan and I are both two people who have been very deeply into the regulatory conversation over the last year or so in Canada. I've been a big advocate for self-regulatory organizations developing in this industry, which is something that we're starting very actively to do with a number of companies in Canada. There's obviously more responsible behavior and responsible disclosures that need to come from projects. Nobody's suggesting that it's okay that projects go out with loosely defined projects, raise money, poorly spend that money, and then say, oh, sorry, who knew? But the flip side of this is there's a reason this market is interesting and exciting to me, and it's not simply because 1 out of 100 companies is going to succeed in this industry, because that's true of any startup in any industry for the last 50 years. These are not new statistics. What's new now is who's investing, and Tone brought this point up, and obviously it's relevant to pay attention to the fact that now you've got people with more to lose putting money on the line. But the flip side is you go back to the dot-com bubble where everybody makes very direct comparisons. The reality back then is that it was a very small group of elitist investors that were entitled to get into the big opportunities that created the 21st century. The Googles of the world were not open opportunities to the average person. They were very, very restricted investment opportunities for a very small group of elite investors, probably American, probably only Californian-based, and if anyone outside of that, it was a very small list. Average people couldn't get in. Average people, on the other hand, could get in those days to Enron stock and WorldCom stock. And these were regulated industries and regulated companies with regulated stocks and big failures of the capital markets. And anybody could have bought that stock in the public market.
Tony wants in on that.
I just want to challenge that. I mean, that's cherry picking a company that succeeded and cherry picking the company that failed. 99% of the time, it's going to be the other way around. Google had 100 competitors, and thinking that you would have picked Google and not one of the other 95 companies that failed, saying that, oh, rich people had Facebook stock. You could have bought Facebook stock after the IPO. Facebook IPO'd at $40. It was overpriced. It fell to 20 within a month. You could have bought it at 20. It's almost 200 right now. Could have made 10 times your money after it IPO'd. But Facebook had competitors like MySpace, where the average person here would have had all their money in, because MySpace was way bigger and way ahead of Facebook. So there's no way the average person would have picked the right horse, or they could have had it in Friendster. This is why, and those VCs, they lose more money for rich people than they make them. It's just a way for that one rich guy sitting at a poker table later on, laughing at his buddy saying, yeah, I was in Airbnb, even though he's not going to tell him that he probably lost more money before he made that.
I think that's an interesting one. Trevor, you want to in on this? I think we're at this interesting juncture of allowing for democratic and allowing everyone to get in on the ground level of these investments, right? And at the same time looking after them and their safeguards. And we live in a country that has investor protections.
To me, you have the freedom to be risky. You have the freedom to take risky bets, and if you lose, to me, the problem is education. The problem is greed. You can't regulate against that. People who are buying tokens because they want to get rich and they lose all their money, I don't think it's the state's job to intervene. I think we should be more concerned about empowering people to make prudent financial decisions and investment decisions, how to do due diligence, how to network and get into deals, rather than just arbitrarily deciding who should be allowed to speculate with their money and who shouldn't.
But how do you plan for the development?
I agree with that. I think other than an age restriction, we don't restrict who can go into a casino. If people decide to go in and gamble money that they don't have to lose, then that's their own decision. We're not in a position to tell people what they can and can't do.
Just to add to that, I think one aspect that is worth discussing is actually the negative feedback that you sometimes get when you administer an ICO and try to impose any sort of limit on how much people can invest. So I think that people want to be able to invest however much they want, whether it's a good thing or not, right? But I think it's important to realize it's not, you will be scrutinized for trying to mitigate that and for trying to self, be disciplined in it. And it's something where you can lose a lot of goodwill with a lot of people, right? So I do think I would contest that, and I think it is the states and the government's job to impose regulation that levels the playing field for everybody. And also, disclosure agreements and so on and so forth are really important in order to make sure that projects are comparable to people who are looking at different projects where they want to invest their money in.
I happen to agree. I'm a CPA, so I happen to agree with the whole disclosure piece. So, we've got white papers out there that are not good disclosure, folks, and terms that are not good for investors. That's me speaking as a moderator jumping in on this discussion, frankly, but we've got, I think Sunny's got to wrap us up, but we got, Sean, did you want to say one more thing from a legal perspective? You look like you did.
Well, I just want to say that I'm really excited for the first ICO that's conducted fully in compliance with securities law. Because like I said, I think it's a great way to raise capital. I know that a lot of people who are raising capital via this method are not necessarily fans of the status quo, but eventually someone will do that, and it will be a way to show, no, I know you did it, but a full-blown prospectus offering, I'm saying. You did it by an offering memorandum, which was great. I respect that too. Congratulations. Very well done.
Here's one last comment.
Pardon me?
This is not an investment advice panel. This is
It's not
research
investment
service.
advice. You can go to Token Funder
Yeah,
later.
Sure thing. Well, let's count. I don't know if the regulator should or shouldn't get involved. I mean, I'm just trying to educate the audience. And I'm usually an anomaly on these panels because I have no interest in soliciting other people for money. But the majority of people's goal is to get money from as many people as they can for whatever it is that came up into their head that they want to do. And of course, and this is the difference that I run into, in that you really got to be careful, and people have been trying to get your money for as long as history's existed.
Matt wants to jump
Yeah,
in. One last, we'll
I
give
think
Matt's
this is
final
like,
word here.
and I get the perspective, but this is a brutal oversimplification. This is not a good characterization of anybody who's offering a legitimate business that happens to be raising money in a novel way. I find it really interesting that, there still is, like it or not, a tension and a competition in this industry of kind of Bitcoin versus the rest. And the libertarians on the Bitcoin world would love to see government intervention in our world. And the irony to me is kind of obvious. I think there are responsible projects raising money. They need to be treated as such. They need to be kept to account. We need to create disclosure requirements. We need to create a regulatory framework. But this is not to say that everybody running an ICO is out to steal your money and make you poor. I think there's tons of people losing money speculating on Bitcoin, and this is not all that different.
Very good, thank you, Matt.